Good morning, everyone. It's Monday, March 13th. We're about a half an hour before the market is set to open. And man, what a weekend it has been. As everyone knows, Silicon Valley Bank has failed, and the government, in a protective measure or in a measure to try to protect the rest of the banking system, the government has shut down Signature Bank. Now, why is this? Well, let's go into a little bit of the macroeconomics here, just so that you understand what's really happening and how it's going to affect the E-mini trading market, the futures trading market today. Today, first of all, the economic calendar shows that there are going to be no scheduled announcements, as you can see. I'm going to go over to the morning news, and the news, of course, all the flags are in the red because of just what I've just told you, with Silicon Valley Bank shutting down and Signature Bank being shut down. So let's talk about, just for a moment, why this has the import of what it did in the futures market. Banks are interrelated. Banks collect money, they take in money, they trade money, and they do this primarily through the bond market. There is an enormous market in bond trading, and Silicon Valley Bank held on to long-term, low-interest bonds, and those bonds declined in value. They couldn't get rid of them, at least not without taking a steep loss. And for whatever reason, they should have been getting rid of them over the last 2 years as interest rates rose. They didn't. So what happened was they couldn't meet their depositors' demands for withdrawals, and that set off a panic, and they could not survive it. They couldn't even survive 5 hours on Friday, according to the report. So let's see how that is going to affect the market. Well, before I go into that for a moment, and I have my Taylor trading zone numbers set up on my chart today, I'm going to show them to you, and I'm going to explain them to you in a minute. The banking system is a system that every other business is dependent upon. It's dependent upon their investments, holding their cash, making their payroll. Imagine if you couldn't get paid because your employer's payroll money went poof, disappeared because of some bank's either malfeasance or stupidity in management. So over the weekend, the government took over Silicon Valley Bank and announced that every depositor is going to be made whole, even depositors that hold more than the $250,000 minimum for the that is insured by the FDIC. And why is that? Well, that's because the government is trying to stave off a banking collapse, because this has a domino effect. And believe me, folks, the last thing we want to see is another bank failure. And Silicon Valley Bank was an enormous failure. I think it was over $300 billion that it failed, that it couldn't meet its depositors' needs and its obligations. An enormous failure. And imagine the companies that can't meet payroll because of that. So over the weekend, the government stepped in and said, we are going to make everyone whole. Okay, so that was because they are trying to, and very possibly might, stave off a collapse in the entire banking system. Okay, so that brings us to where we are today, and what you're seeing on my chart, Monday, March 13th, and these are the Taylor trading numbers. And friends, I want to point out to you some features of the Taylor trading numbers. First of all, I've seen a number of videos of other people trying to explain Taylor. Believe me, if they don't know how to calculate the numbers, they don't know Taylor. Some of them tell you it's a 3-day cycle, 3 days up and then down, and yada, yada. If they don't know how to calculate the Taylor numbers and don't know how to use them, they don't know Taylor, okay? It took me years to learn Taylor. And if you don't believe Taylor is difficult to learn how to calculate, try reading the book, my friends. At any rate, today the Taylor numbers are resistance at 39.05, support down at 38.23, and Friday's close was 38.62. So as you can see, Monday. Now let me go back to where we were overnight. Now overnight, the market was trading up at 39.28, and then at 4 in the morning, look what happened at 4 in the morning. Look what happened at 4 in the morning. Prices started to fall off. What happened at 4 in the morning? There was nothing new at 4 in the morning, but they started to tail off. Came up some, they came down, and look where they came down to. Exactly at where the Taylor support number at 38.23 existed. This is a made-up number. It's a calculated number, but the Taylor numbers are target numbers. And if you don't know the Taylor numbers and you're listening to someone who's trying to explain it to you and he doesn't know the numbers, believe me, he doesn't know Taylor. So today, the market declined down to the Taylor support at 38.23, bounced up from there, and there are opposing forces today, folks. So what are those two opposing forces? Well, the opposing forces are, on the one hand, people are afraid that their bank is going to be next and they won't be able to get their money. So what are they going to do? They're going to withdraw their money. Where are they going to put it? Under the mattress? On the other hand, the government is saying, we are stepping in. We are making all banks whole. We are protecting your deposits. We are protecting your payrolls. And they want to prevent a banking failure. And also, believe me, there's going to be an invisible hand that is going to be propping up the stock market today. Believe me, folks, the stock market is not going to crash. I will say 95% that we've seen probably the worst of the worst. There might be some additional panic set in today, but I believe that the Taylor numbers are going to be relatively accurate today. I say relatively because I don't know whether the prices are going to trade totally within this 82-point range from 38.23 up to 39.03, 39.04. But nevertheless, pretty remarkable that when prices dropped in a free fall, where they stop? Right at the calculated Taylor numbers. So that's my video for today. I'm going to get this up on YouTube before the market opens. Even though you're not a subscriber to my Trading Zone report, you should take a subscription. It's not expensive. I give it to you for a week for free at timelessdollar.com. And believe me, folks, these are target numbers that are exceedingly, amazingly accurate. Not all the time, but very often. So where is the market going to trade today? I'm willing to bet that the market is going to trade back up. I think it's going to reach our gap if the market does open gap down, as it looks like it's going to. I believe this gap is going to be filled. Yes, there's going to be some rattling around, perhaps because there is going to be a feeling on the part of nervous traders that the banking collapse is imminent. I don't think it's going to be. I just heard Kevin O'Leary being interviewed, and he said that the government should nationalize the banks and that you should take all your money out of the banks. Kevin, nonsense. Just because you hit a home run doesn't make you a genius, okay? All right? So that's my video today. Marv Eisen for Timeless Dollar Trading Academy. Trade safely, use lots of patience, and if things are a little too unsettled for you, wait till things shake out. You don't have to trade every day. So have a safe day, trade safely. Thanks so much for watching, and I'll see you in my next video. Oh, and by the way, today is futures rollover day. We've been trading the March contract, the H contract. Now we're going to be trading the M contract. So today is rollover day. Start trading the ESM or MESM contract, and we'll be all on the same page. Have a great day, folks.